Hello guys, let us continue with our class for statement of cash flow. Statement of cash flows. This is lesson 2, recorded video. So lesson 2, statement of cash flow. So in lesson 1 we talked about the format of the cash flow statement, as you can see, starting from the cash flow from operating activity to cash flow from investing activities, and then to cash flows from financing activities. Then we did some workings. In this case, we did some workings where we was required to prepare to determine the depreciation that should be the depreciation in the income statement actually. Oh, sorry, the depreciation is supposed to be recorded in the cash flow statement. That one you calculate it from the accumulated depreciation. Then the sales proceed, it is calculated from the disposal account. Then the PPE is calculated for the acquisition of a PPE is calculated from the PPE account. And also we determine some other account like tax account, we add the dividend account, and then also the interest account uses the same format. So today we are going to continue by doing a question so that we can see what is required of us. So we are supposed to do a question from this point, and to be specific, we shall do a question of December 2024. So December 2024 to be our question. I think it's question number 3B, number 3 boy. And specifically we shall focus on the question where the PPE is given on cost and not the net book value. So these workings, so remember, these workings for accumulated depreciation, disposal, and PPE, all these workings, it is where the amount provided is on cost. So we shall focus on that one for today. Then maybe another class we shall focus on the net book value when the PPE is given a net book value. So let us start with the cost. So let us move on. So statement of cash flow. The question is for December 2024, question number 3B. I'm going to read it. It's about the Roca Ltd. Now, Roca Ltd manufactures high quality shoes. The following financial statement of the company during the year ended August 2024 and August 2023. So we have the information there, you can see it. So we have the income statement or the profit and loss account. That one is okay. Then you have the statement of the financial position for 2023 and 2024. Remember, when preparing the cash flow statement, we need the income statement for one period, and the balance sheet must be provided in 2 periods. So in this case, it is 2023 and 2024. Additional information number 1, the company made a profit of 34,320 on sale of machine whose cost was 466,986 and the accumulated depreciation was 102,986. So we have the profit on sale of an asset. Number 2, the revaluation, the only revaluation made on an current assets was on the freehold land. So was on the freehold land. So we are required to prepare the statement. So we are supposed to prepare the statement of cash flow according to ISF. So the first information, we start with the working of the sales proceeds. Now before we calculate the sales proceed, we start with the profit. So working number 1, we say profit on sale of an asset. Profit on sale of an asset, which is that 4,320. That is number 1. Number 2, we need to consider now the and then from that information we have the cost and the accumulated depreciation. If you can see from that question, we have the cost and accumulated depreciation. For now we can ignore that information, but the profit on sale of an asset, that one is important. Now on number 2, we can go and calculate the non-current asset account. non-current asset account. So let us prepare a non-current asset account. So we start with the balance brought down. So remember, in this case, if we check our income statement huko juu and current, then you have the accumulated position, meaning the balance at the beginning is the cost, because we have been provided with the accumulated depreciation. Now, when you take the cost, you less the accumulated depreciation, you get the net book value. Now, in this case, the first items, for example, in 2023, the opening balance of the non-current asset, 27,833,208, that is the cost. So tunasema 27,833,27. Let me write it again. 27,833,208. Then balance carry down at the end. So at the end, the 33,930,702. Now, remember, when you prepare this account, we need to prepare if we have an acquisition, or so we need to determine if we have an acquisition of that as of any asset. Now let's go to information number 1 again. Now from information number 1, a machine whose cost was 466,986 was sold. So tunasema hapa disposal cost. Disposal, remember this item is recorded on cost. Disposal cost. So it was disposal, it will reduce this amount. So remember the balance raised around in 27,883,208. Now when we sell an item, it's supposed to reduce this account. So we credit 466,986. And then before even you close this account, check if there is a revaluation. We were told there was a revaluation of the freehold. So let's talk about the revaluation of freehold. Revaluation of the freehold. So revaluation of the freehold, unaenda kwa your balance sheet, unaenda kwa capital and liabilities. So you have the ordinary share capital, premium, and revaluation reserve. So you go to the revaluation reserve. Now revaluation reserve, the balance at the beginning was 21,27,840. At the end, ilikuwa 38,76,080. Kumaanisha we have an increase. That increase is a revaluation. So that's 7, tunasema 38,76. So 38,76,080 minus 21,27,840. 21,27,840. Now the difference between that one will be the revaluation gain. It will be the revaluation gain. So we find the difference. So tunasema 38,76,080 minus 21,27,840. Napata 17,48,240. So 17,48,240. So inakuja hapo. So revaluation. So 17,48,240. Now we balance this account. So now we can balance this account. The balancing figure will be the acquisition of the non-current asset. So tunasema 33,930, 702 plus 466,986 inatupatia 39,7688. So 34. Sorry. So tunasema 34,397,688. 34,397,688. So you get the balancing figure. So minus 17,48,240 minus 27,833,208. So ni 48,16,240. 48,16,240. This is an acquisition. So we say acquisition or the purchase. So ni 48,16,240. 4816 to 40. That is the first working. Actually, the second working actually. This is working number 2. Working number 2. Working number 3, you're supposed to prepare you're supposed to estimate what we call the depreciation. Now, depreciation. So depreciation is determined from the accumulated depreciation account. Accumulated depreciation account. So we start with the balance brought down. So tunaenda kwa income statement huko juu. Accumulated depreciation huko juu. Tukienda huko juu kabisa, the balance brought down for the accumulated depreciation is 6607,847. So 6607,874. Then the balance carried down. Balance carried down is 7695. 7695 142. 7695 142. Hiyo iko kwa balance sheet. Now we can look for the information which affects this account. So we are supposed to look for the accumulated depreciation on disposal. So you record here accumulated depreciation on disposal. It was information number 1. So how much was it? So information number 1 anatuambia they sell an asset which had a accumulated depreciation of 102,906. 102,906. 102,906. 102,906. 102,906. Now we can balance this account 102,906. So the balancing figure is a depreciation that will go to the income statement, to the cash flow, sorry, that will go to the cash flow. So we balance this account. So tunasema tunasema 76 95 142 102 906 798 048 798 048. So the depreciation for the year, what is the depreciation charge? This one is what we need. Depreciation charge itakuwa minus 6607 874. 6607 874. 1190 174. So that's all about the depreciation account. How to get the depreciation for the year. How to get depreciation for the year. How to get the depreciation for the year. Now we also need another one item. We need to prepare the disposal account. Disposal account so that we can determine the sale from sale of an asset. So disposal account. Disposal account. Disposal account. Now disposal account will start with the cost of the disposal kama kawaida. So the cost of the disposal ilikuwa pale ndio kwa juu 466,986. Then you can check on the accumulated depreciation of the disposal. Accumulated depreciation on disposal. Accumulated depreciation on disposal day 102,906. 102,906. Then you check if you have a gain or loss from the sale of an asset. Now we had a gain. So we had a gain. So the gain dero juu 34,920. 34,920. Then we balance this account. 34,920. Now we balance this account. Now if we balance this account, it means the balancing figure will be the sales proceed. The balancing figure will be the sales proceeds. The balancing figure will be the sales proceeds. So let's balance it. So tutasema add 466 986 plus 34 920 501 906 501 906 501 906. Then you get the balancing figure 102 minus 102 906 399,000. 399,000. Now the 399,000 in this case is what we call the sales proceed. It's what we call the sales proceed. What is supposed to be 102 986 hapa? Nimefanya makosa. 102 and 986. 102 986. So tunasema 466 986. 466 the cost, let me confirm, 986 plus 34 320 541 306, supposed to be 541 306. So 466 986 plus 34 320 inakuwa 541 306, supposed to be 306 3. Then we minus 102 986 398 320 398 320. So 398 320. Sio tumemalizana hivyo. Now I think tumemalizana, tumebakisha tu one account. That account is the tax account. So we are remaining with one account. I think it can do it here. Tax account. Tax account. So tax account tunaanza na balance go down. Then balance carry down. So balance go down ni ngapi? So unaenda pale kwa balance sheet pale chini kwa non-current liabilities. So the tax at the beginning 674,024. 674,024. 674,024. And then the balance at the end is 627,250. 627,250. 627,250. And then we go to the, so hii unaenda directly huko juu kwa income statement provided. So ukienda huko juu kwa income statement provided, we have the tax provided there. The corporation tax wanatuambia ni 820,924. So unakuja unaandika hapa income tax, income statement tax from the income statement wanatuambia ni 820,924. 820,924. Then the balancing figure will be the tax paid. So the balancing figure will be the tax paid. Unakuja andika hapa tax paid. Tax paid. So we find that one, that's tax paid. So by how do we get it? We get it by balancing the account. So we get it by balancing the account. So let us balance that account. So tutasema 674,024 plus 820,924. Tunapata 1494,948. So 1494,948. 1494,928. 1494,928. Then we get the balancing figure. Then we get the balancing figure. So to get the balancing figure itakuwa ni minus 627,250. So 867. So 867,698. That is the tax paid, which will go to the cash flow statement. So 867,996. I think we have completed the workings now. Now we can prepare the cash flow statement. Now let us prepare the cash flow statement. So we say local LTD. So we say local LTD statement of cash flow. statement of cash flow. Okay, period. Let me look for the period. For the year ended. For the year ended. For the year ended 31st August 2024. 31st August 2024. So I think it is in thousand. Let me confirm. Not in thousand. So iko sawa. So tunasema Kenya shillings. And also Kenya shillings. So we start with the cash flow from operating activities. Cash flows. Cash flows from operating activities. So we start with the profit before tax. Profit before tax. So profit before tax ni ngapi? So unaenda huko juu. So unaenda kwa our income statement huko juu. Anatuambia that the profit before tax profit before tax ni 254944. 2449 254944. Tunaanza na hiyo. Tunasema 2549,404. That one is fine. Then you do an adjustment. Actually, I could have used a different pen in this case so that it were rahisi. The heading nitumie blue. So let me use the heading. So tunasema profit before tax. Profit before tax. Tumesema ni ngapi? 2549. 2549,404. Then you do adjustments. Now the first adjustment we are supposed to do is to check for the. So now let's go to our income statement first. Let us go to our income statement. Our income statement. We start with the depreciation, the working tumefanya. Start with the depreciation. Depreciation ndio hii hapa 1190,174. Supposed to be 1190,174. So depreciation was removed. So depreciation was deducted. So depreciation was deducted from the income statement. Now we add it back. So depreciation was deducted. We add it back. Yeah. We can look for another item. Interest paid. Now, remember interest paid. We don't have interest account in our balance sheet. Now the one that's in the statement, in the income statement, it is what is paid, unless we have the interest payables in our balance sheet. So ukienda kwa balance sheet, the only account tulikuwa nayo, it was the corporation tax at the beginning and at the end, but the interest haikukua. So interest at the beginning and at the end haikukua. So kama haikukua ni kumaanisha what is the income statement is what was paid. So interest paid. So we say interest paid. Interest paid. Now interest, remember interest in the it was deducted. Now what do? We add it back. So not only for 10, 800. For 10, 800. We have another item there, investment income. Pale juu, investment income is also considered as a non-cash item. Investment income. Now investment income, if you check it clearly, it was added. Now we are supposed to less it 29,484. So it was added, so we less it 29,484. 29,484. So it was added. We are supposed to deduct it. Then we had another item here, profit on sale of an asset. Profit on sale of an asset. Profit on sale of an asset. Now profit on sale of an asset, it was in our income statement, it was added. Now we are supposed to remove it. So it was added, so we remove it. So it was added, now you are supposed to remove it. Now those are the items for that we are there. No any other information concerning that one. So let us find the working, do the working. 1190, 174 plus 14, 800 minus 29, 484 minus 34, 320. So mimi napata 1537 kidogo tu 1190, 174. Depreciation is supposed to be 1190, 254. Let me check first, just a moment, I check. So let's correct this one. 102, this is supposed to be 102,986. 102,986. There was an error. So 102,986 plus 76, 95, 142 inakuwa 798, 128. That's supposed to be 128. Supposed to be 128. Then minus 6607, 874, 1190, 254. So 1190, 254. This is supposed to be 1190, 254. 1190, 254. Let's correct that one. 1190, 254. So let us add now 1190, 254 plus 410, 800 minus 29, 484 minus 34, 320. Napata 1537 to 50. So 1537 to finje. So 1537 to 50. 1537 to 50. We can call it cash flow before working activity. You can call it cash flow before working activity. That's for it. Cash flows before working activities. Once tumeshapata hiyo, now we can check changes in working capital. Let's look for changes in working capital. Changes in working capital. Changes in working capital. So changes in working capital, hiyo tunaenda twende huko juu kabisa, tuanze na huko kwa current assets, inventory. So inventory at the beginning was 7 million, at the end was 8 million. So we have an increase in inventory. Let us start with the increase in inventory. Increase in inventory. Now increase in inventory itakuwa ni 8582. 85. Okay. Let's just find the difference direct. So pale tukiona it is 8582 in our statement, 288 minus the one at the beginning 7573 75, 73, 696. So it is 1008592. So tunaandika hapo the increase. So an increase we are supposed to add 008592. Sorry, an increase we are supposed to less. Sorry, an increase we are supposed to less. So when you have an increase in inventory, we are supposed to less. Why are we lessing? Now, when our inventory increases, it means we purchased more inventory, and therefore we pay. So when we pay, means it is money out. So when an asset increases, it means we are increasing our asset. So how do we increase our asset? By purchasing. Now, when we purchase, it means that money is going out. So that's why we are lessing. So money out, we deduct. Money out, we deduct. We go to receivables. Now receivables, we have a decrease in receivables. So receivables ilikuwa 4 million, ikakuja 2 million. So we have a decrease in receivables. Decrease in receivables. Decrease in receivables. Decrease in receivables. Now, when you have a decrease in receivables, that means money is coming in. So someone has paid us. Now that one is an inflow, so we add. So when you have a decrease, we add. So ni 4504, 4504, 864 minus 3231, 3231, 150. Natupatia 1273, 714. So we add it. 1217, 714. 1273, sorry. 1273, 714. So 1273, 714. Then after hapo tunaenda chini kabisa, tunaenda kwa current liabilities. We have payables. So payables, we have a decrease in payables. Decrease in payables. Decrease in payables. That means money out. Tumelipa. So watu walikuwa deni yetu tukawalipa, deni ikapungua. So that is money out. So we are supposed to reduce. So ilikuwa 5694. 5694, 624. Ika reduce back 49 42, 49 42, 860. So kumaanisha 751 764. So we have paid 751 764. So tumelipa. So payables tuko na deni zao. So deni yao ilikuwa, tukianza deni yao ilikuwa 5 million. Lakini mwaka ikisha deni yao ilikuwa tumewalipa ikafika 4 million. Kumaanisha we paid them. So that decrease is a payment. So let us find that one. So minus 1008 592 plus 1273 714 minus 751 764. So this one is minus 486 642. So we add it. So pale juu tulikuwa tunapata ngapi? So tunachukua huyu plus huyu minus huyu. So 25 49 404 plus 15 37 250 plus answer 36,000 12. So 3,600,012. Na this one we call it the gross. We call it the gross. Ama tuache nayo. We less tax. Now we can less our tax. Our tax to kufanya working day hapa 867. So we less 867 698. So let us now name those accounts. So we tutamuita gross cash flows from operating. And then ya mwisho utapata net cash flow from operating. Net cash flows from operating. So what will be the figure? So net cash flows from operating activities. So minus 867 698. So mi napata 27 32 314. So this one is 27 32 314. So 27 32 314. 27 32 314. 27 32 314. Now from that point, now we can calculate now cash flow from our investing activities. Cash flows from investing activities. Cash flows from investing activities. The first one tunaanza na huyu because we had to work out it. This one we have acquisition of non-current asset. So we say acquisition of non-current asset. Ndio huyu hapa 4816. 4816 to 40. So when you acquire something, we are buying, so money out. Then you have sales proceeds from non-current asset. Sales proceeds from non-current asset. So that one is ndio hii hapa 398 320. So 398 320. Now we check if we have any other form of investment. I think there was no any other. Ilikuwa tu hiyo. So there's no any investment. You can add investment income. Investment income tunaweza iweka hapo, or you can say to put it here, or you put it under financing. So investment income. Now investment income, for me I will put it under investment income. Ilikuwa ndio hii hapa, this one 29484. So mimi nitaiweka under financing activity. So hiyo au tunaweza iweka pia hapo. So investing activities, why do you think we should put it? Investing, the investment income. Okay, investing from that investment. Let us put it at it. Tuiweke hapo investment income. Investment income. So let us put it here. Investment income. Investment income. So it was an income. So 29 inaingia 29484. So let's get the net cash flows from investing activities. Net cash flows from investing activity. So let us add them together. So tunasema minus 4816 to 40 plus 398 320 plus 29 484 29 484. So 29 484 itakuwa this one will be minus. Let me remove the word activities. You know it is investing activities. Ndio itoshe hapa. Tunasema ni 43 88 434. I think that one is okay. I think that one is okay. So we can go to the last one. The last one is about financing activities actually. Okay, that one is fine. So 398 320. Let me add again. So minus 4816 to 40 plus 398 320. and then plus 29 484 4388 4388 4. It's supposed to be 436. Supposed to be 436. Okay, now we can go to cash flow. From cash flows from financing activity, from financing activities. So cash flow from financing activities, we shall start with the, tunaanza na issue of shares. So tunaenda tuangalia share capital. Now share capital, we have an increase from 7.8 million up to 10.9 million. So that increase means we have an issue of share. Issue of share. So you find the difference. So issue of shares kumaanisha pesa imeingia, so that's money in, so we are supposed to add it. So that is money in. So 10,920,000 minus 78,00123. So 31,320, 31,320, 31,320, 31,20, sorry, thousand. That's money in. Share premium also increased. So we have share premium. So share premium issue. So there was also an issue. So it increased. So 4103, 840 minus 4038, 814. So 65,026. That one is 65,026. 65,026. So 65,026. Then you have interest paid. Nitaiweka hapa. The financing interest paid. Ndio hii hapa juu. So that one tuna reduce now for 10, 800 interest paid. I think hakuna kitu ingine. So hakuna kitu ingine. So tuende kwa loan kwanza. So we are supposed to go to the loan. So we have a debenture. Revaluation reserve tumeshafanya. That one will not affect any other account. It will only affect the disposal. Sorry, it will only affect the PPE account. So the last item is debenture. Now debenture tulikuwa na loan ya at the beginning ya 4 million. Mwaka ikiisha tulikuwa na loan ya 35, kumaanisha tumelipa loan. So loan paid, that's money out. Loan paid. Kama increase ingekuwa loan received. So we have a loan paid. So 89,000 minus 35,01,680. So 10,87,320. 10,87,320. So this one is 10,87,320. So I'll find the net cash flow from financing activity. Net cash flow from financing activity. Net cash flow from financing activity. So we say net cash flows from financing activities. So we add them together. So tunaanza na 3120, 3120, 3120,000, 3120,000 plus 65,026 minus 410, 800 minus 1087, 320. So mimi napata a positive figure ya 1 million. Sorry, let me use a different pen. 1,686,906. So from that one, if you can get the net changes in cash and cash equivalent. Net changes in cash and cash equivalent. So let's find the net change in cash and cash equivalent. So tutasema ni 2732,314 minus 48 4388 436 plus 1686 906, napata 3784. 3784. Then we add cash and cash equivalent. Cash equivalent at the beginning. So cash equivalent at the beginning. Now that we need to do a working. So you need to do a working for that one. So I think no working is required. So we have the bank at the beginning. So hapo unakuja naandika hapa. So you need another working. So cash and the cash equivalent. Let me put it here. Kwa sababu ni kumaliza tunamaliza. So we know that cash and cash equivalent at the beginning. So ni ngapi? So tunaenda pale juu. So we only have the one item, 27848. 27848. Ndio hii hapa. Nakuja naeka hapa. 278,408. When you add it together, you need to get the cash and the cash equivalent at end. So at end, so in our balance sheet ni 309,102. So at the end, so cash and the cash equivalent at the end tumana ni 309. Hapo kwa balance sheet, ukienda kwa balance sheet yetu hapo anatuambia ni 309. Iko wapi? Imepotea. 309,192. So inafaa iko hapa. So it's 309,192. So when you add, so let us confirm. So net cash and cash equivalent at the beginning ni 30,784 7 plus 278,408. So 309,192. That one is correct. Or you can confirm with this one. The difference between the two, you are supposed to get the net cash and the cash equivalent. And the cash equivalent, which is about, which is the difference between the two, about 298 and 3784. 3784. So iliongezeka. So there was an increase in cash and cash. So ilikuwa 278. So the bank balance at the beginning got 27848, but at the end it was 309,192. So what was the increase? So there was a net increase. So of that is 714 and you 3708. So in exam, the net cash flow you can get it from your cash and cash equivalent direct. Then ukishafanya, what you get here must be what you get here. So ukichukua huyu 2732 314 minus 4388 436 plus 1686 906 itakupatia 784, and that is the increase. So unaenda kwa your balance sheet, you check the increase in your cash and cash equivalent. So ukipata the same, then you are correct, and that's how you are supposed to prepare the cash flow statement. So that's how you are supposed to prepare the cash flow statement. So that's how you are supposed to prepare the cash flow statement. And remember this question. So remember this question. The assets were on cost. So remember the non-current assets were on cost. Sometimes you can find a question where the non-current assets are not on cost, but they are on other on net book value. So when you find the items are on net book value, this formula is not applicable. This format, from this point, from non-current asset, from accumulated to disposal, you cannot use that one the way it is. There will be some changes. But for cost, so this question was on cost. So but when we are given in cost, this is the what you need to use. So I will look for another question later where the non-current assets are on net book value. So the information provided is on net book value. Now in this situation, those workings will not be applicable. So I will look for that question maybe in our third class or in our fifth class. So let's do another question where the non-current assets are on cost. So we do another question, and that one will be on lesson 3. And then lesson 4 we shall do for net book value. So lesson 3, we shall meet for lesson 3.